Oracle just reported their latest quarterly figures, a miss, a double miss. Stock is down 2% or so. They did raise the dividend by 25%, believe it or not, which is quite a big deal. RPO increased 63% year over year to $130 billion. RPO means remaining performance obligations, which you can say that this is what we could expect from the company in the future. Now, again, this number has been increasing quite rapidly in the last couple of quarters, so yeah, not too bad. Anyways, right now, we can see that year on year, stock is still up 27.8%, but year to date, the stock is down over 12%, which, to be honest, we've seen way worse, right? We've seen way worse. Right now, it has a market cap closer to $430 billion and a forward PE of 24.1 times. If you look at the expected growth rates for revenue and EPS 2 years out, it's around 10 to 12% or so revenue and EPS. Now, we did get a couple of comments that affected Nvidia, AMD more specifically, and then also some other cloud players and all of that. So let's touch on everything you need to know from Oracle in this video. Of course, we will have a live stream like always with Jose on Tuesday, which is tomorrow at 1 p.m., not 12:30, 1 p.m. And we'll touch on Oracle and all the other news that came out in the last couple of days. So make sure you tune into that live stream. If you like this type of videos, hit all the buttons. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So first up, main overview here. So EPS missed. The expected number was $1.49 and revenue $14.39. As you will see, revenue came in at $14.1 billion. So a small miss, and that was just up 6% year over year. You'll say, is this company not supposed to grow much quicker? Yeah, 1 second. Remaining performance obligation of $130 billion, up 62% year over year. EPS non-GAAP $1.47, so it missed by basically 2 cents on a non-GAAP basis, and that would have been up 4%. On a GAAP basis, it's up 20% year over year. Now looking at the sub-segments here, so cloud revenue, $6.2 billion, up 23% year over year. Cloud infrastructure, that's where the huge growth is coming from, but that's only $2.7 billion, that's up $49 billion. Cloud application, $3.6 billion, up 9%. Fusion Cloud ERP up 16%, that's $900 million. And NetSuite Cloud ERP, also $900 million, that's up 16% year over year. Now, they did share a couple of comments here in the press release. So first of all, we have now signed cloud agreements with several world-leading technology companies, including OpenAI, xAI, Meta, Nvidia, and AMD. We expect that our huge $130 billion sales backlog will help drive a 15% increase in Oracle's overall revenue in our next fiscal year, beginning this June. So expected to see revenue grow well faster than the 6% that we have just seen. That's not all. They expect RPO to continue to grow rapidly as they look forward to signing their first Stargate contract, yet another big opportunity for Oracle to expand both its AI training and AI inference businesses in the near future. They're also on schedule to double their data center capacity this calendar year. Customer demand is at record level. Our database multi-cloud revenue from Microsoft, Google, and Amazon is up 92% in the last 3 months alone. GPU consumption for AI training grew 244% in the last 12 months. So yeah, if some had some doubts that the growth cycle, AI growth cycle is over, think again. And this is basically the increase of 25% for the dividend. So a dividend per share here of 50 cents. That's up from the 40 cents, which, to be honest, is a big deal, right? It's a big increase, 25% increase, which probably tells you that they're quite comfortable that they're going to generate billions of dollars in free cash flow in the future. And now a couple of comments from the earnings call talking about the financial acceleration. So they remain very confident and committed to the total cloud infrastructure revenue for fiscal 2025 growing faster than the 50% reported last year and will be even faster for fiscal year 2026, likely a lot faster. Our confidence in meeting our $6 billion revenue target for fiscal year 2026 is now stronger than ever and represents around a 15% growth rate. More importantly, I now expect that our fiscal year 27 growth rate will be around 20%, which is even higher than they previously guided. Let me now turn to the guidance for Q4. So what do they expect? Currently, they should have a cent to 2 cent negative effect on EPS and 1% negative effect on revenue when you assume exchange rates. However, as usual, currency impact may be different, so focus on constant currency. Total revenue is expected to grow from 9 to 11% and is expected to grow 8 to 10% on a constant currency basis. Total cloud revenue is expected to grow from 24 to 28%. And non-GAAP EPS is expected to grow between -1 to +1 and between 1.61 and 1.65 in USD. Moving on to a couple of announcements here. They said that they're in the progress of building a gigantic 64,000 GPU liquid-cooled NVIDIA GB200 cluster for AI training. Their multi-cloud business at Amazon, Google, and Microsoft grew 200% in the last 3 months alone. In addition to these rapidly growing existing businesses, new customers and new businesses are migrating to the Oracle Cloud at an unprecedented rate. And here it comes for the AMD shareholders. In Q3, we signed a multi-billion-dollar contract with AMD to build a cluster of 30,000 of their latest MI355X GPUs. Pretty big deal. And all of 4 of the leading cloud security companies, CrowdStrike, Cybereason, Newfold Digital, and Palo Alto, they all decided to move to the Oracle Cloud. But perhaps more importantly, Oracle has developed a new product called the AI Data Platform that enables their huge install base of database customers to use the latest AI models from OpenAI, xAI, and Meta to analyze all of their data they've stored in their millions of existing Oracle databases. Now, this was a very interesting question. What is Oracle's unique value add here, and what can Oracle do that others can't? So it said the following: the capability we have is to build these huge AI clusters with technology that actually runs faster and more economically than our competitors. So it is really a technology advantage we have over them. If you run faster and you pay by the hour, you cost less. So that technology advantage translates to an economic advantage, which allows us to win a lot of these huge deals. And it's not just the Stargate deal, which is in our future, by the way. We've got over $130 billion in RPO without any transaction from Stargate. So nothing, not a cent from the Stargate project is in that $130 billion RPO. So again, Stargate looks to be the biggest project, AI training project out there, and we expect that will allow us to grow our RPO even higher in the coming quarters. And we do expect Stargate, our first large Stargate contract, very soon. And to be honest, that's pretty impressive. Now I know if we just look at the beats and misses, couple of misses here, that's never great. And so the stock is down 2%. Now, of course, in this current market climate, stock being down 2% is really not that much since, well, most of the stocks have been down 30 to 50% in just the last couple of weeks, right? The gains from the last 3 months and a half, 4 months or so have all disappeared, vanished. But you invest for the future. And I think the future for Oracle is still very, very bright. If you just look at the numbers, you do look at the expected growth rates for this fiscal year and the upcoming fiscal year, I mean, nothing tells me that growth is slowing down. Actually, they just told us that growth is accelerating. So, and that's without this Stargate project. So not too bad, I'd say. Not too bad. Now, looking at the stock right now, it's under the 200-day moving average, just like plenty of stocks out there. But here, if you look at the weekly, RSI is low, but not very low, not neutral either. So we'll see what happens. It's a bit in no man's land, okay? It's a bit in no man's land. Of course, we've seen a big retracement in the last couple of months now. It's down 27% since the peak back in December. If we look at the daily, even the daily, RSI-wise, we're not oversold. Getting closer to it, but still far away. What we can see is that we are going to, well, close that gap. There was a gap up back in September, and now we're going to close that gap. As we say, not all gaps get filled, but most of them do, and does seem like this one is going to get filled tomorrow. So from a technical standpoint, I think could be a rebound area. But of course, from an investment standpoint, I think Oracle is still one of the best in class businesses. I know it doesn't get as much attention as all the other players, but there is a reason why all of the other players are working with Oracle. So not the best of the best quarter, good guidance, I would say. Good commentary on the future, good comments on Nvidia, on AMD specifically, and on some other big players there. So good information, not jumping up and down. I mean, let's be honest, the last couple of days in the stock market were not the most exciting ones. Although, good deep buying opportunities, but then again, deep crashes, it's a bit the same these days, right? Anyways, that's all I've got for you right now. We'll discuss more during the live stream. Like, subscribe, all of that, and I'll see you all in the next one. Bye-bye.